Okay. All right. I think we're live.
That's what the camera says.
I know. Like, I don't know what's going on here. This is Danielle from Black Business Woman, Black Owned Nashville. I am excited to be here again today with our expert in all things home and auto insurance. And today we're going to be talking about how to keep your rates low. And Lord knows I need this conversation because I'm all about learning how to save some money on this insurance. So let's jump on in, Jeff. How are you today?
I'm doing good, Danielle. How about yourself?
I am fantastic and very much looking forward to the weekend.
Yeah,
happy,
yeah.
happy to have you. So let's jump on in. You have so much experience in this industry, and a lot of times folks are just complaining about their rates being so high, and that keeps some people from actually getting the right coverage or being covered at all, especially when it
Correct.
comes to auto insurance. So, what are some things that we can be doing to keep our rates low? Um, as we or to find lower rates, whatever you got for us. All of us out here trying to save money these days as we head into the recession.
Right, right. Yeah. Well, the first thing I was saying, this is the hard part, because some of the things I'm going to say are going to be somewhat contradictory. But the first thing you want to do is you don't want to switch around to a bunch of different companies. One of the things that happens is that in the last, maybe I would say about 10, 15 years, insurance companies started scoring policies differently. So not only do where you live, your car, your driving record, those aren't the only things that they take into account. One of the things they take into account is how often you switch insurance policies. So you kind of want to find a company that you're going to stay with for a decent amount of time. If you're jumping around like every few months to a different insurance companies see that you're looked at as a more riskier type of customer. So you're actually going to probably not get the best rates that you can from that insurance company. So that's the first thing. You want to try to get with the company and stay with them. Now, the second thing is obviously you want to shop around. This is where the contradiction comes in. You want to be
All right.
there's always, you can probably find lower rates out and about, but you don't want to shop around and jump around all the time. If you get with somebody, you want to stay with them for, my opinion, about a good 2, 3, 4 year period. Company will look at you as not a risk to jump around constantly. You're going to be in the best pricing points when you do it that way. So that's where the contradiction comes in.
Yeah, that's really interesting. And I think that, a lot of times, as anything in life, you find a lower rate and you go on about your business and you move around. And sometimes it may not even have to be a substantial savings.
Mm-hmm.
It's just a little money. And I'm like, I'll take this extra $10, but not thinking about the fact that it can hurt you on the back end when
Exactly.
you in the future. So that's a great point. Also, if you let policies lapse, that can hurt you as well, right? Talk to
Oh,
us a
most
little bit about that and like how we can avoid that.
Yeah, no, you definitely don't want to go into a lapse situation. I actually just got off the phone with a customer who they let their policy with another company lapse, and so they were calling around, and then we weren't able to offer them the best rates possible because they were currently showing in the lapse. So you always want to make sure, if you're in a situation where you feel you're paying too much for insurance, you have a bill that's coming due. You do want to make sure either you pay your bill and keep your insurance current, then look for other insurance, or look for other insurance before your policy goes into lapse coverage. Because even if your policy goes out for a day or two, you could be looking at paying substantially higher on the new policy. And now we're seeing some companies are tightening up their rules where the woman I just got the phone with, actually, her company, she had only been canceled for about a day or two. When she came back, they wrote the new policy she had for her was substantially higher. So you never want to go without coverage if you can help that.
Oh God. Oh Jesus. So much to worry about in life.
Exactly.
And so we talked about this real quick last time, but the fact that you can get some coverage if, like I was telling you in my situation, my car was down. I had to get a new transmission. It was sitting for months. And I was like, well, what's the purpose of having insurance if the car isn't moving? Tell us the benefits of still keeping a policy, even in cases like that, and what type of policy we can get.
Right. There's two different policies you can get in that scenario. One you can do is called suspending or put your car in storage, where that's only where you're only paying either the bare minimum coverages or and some companies, because different companies have different forms on their policy, you can maybe not pay anything at all, but still keep the policy in force if you're not going to be driving the car. Now, the express situation is if you're telling them that your car is going to be in storage or you're not driving, that you're not going to be driving at all. If you were to actually go out and drive your car, get into an accident, you wouldn't have any coverage. That's one option. The other is some companies offer what's called a drive any car policy. What that means is that you just have liability coverage. So if you happen to be driving a car, the coverage that you're paying for is going to extend liability coverage to that. So let's say, for example, somebody loaned you a car or you were renting a car, you would have liability coverage for that time that you're using a vehicle. So now obviously if you're in a situation like that, you're not going to be driving as much. Those policies tend to be pretty inexpensive. Normally it could be, anywhere between $15 to $20 a month. So you're still keeping coverage. So you're not showing that you're going to a lapse, but you're still having coverage. And that helps you when you do go back to, okay, now I have a car, I need to get full insurance. It
doesn't show us that lapse in
exactly.
coverage. Okay, fantastic. That's great to know. So even if you're without a car, like for a while, it's still a good time. It's still a good idea to keep some sort of coverage. I mean, I certainly understand, like, you may be driving somebody else's car and you don't want no problems, with that. But even beyond that, just for how it looks on your record, it makes sense to keep some sort of coverage.
Exactly. And then even in that situation, like, for example, I know you're engaged. There's a situation where you could be added to your fiance's policy as a driver. So then that shows that you didn't have a lapse. If you're going for, okay, I canceled my policy, now I'm being listed on my fiance's policy, and you can show a trail of, okay, my policy canceled this day. I was added to his policy that day. When I was driving his car. Now, if you go get your own policy at that point, there's still a continuation of coverage there. That's something that happened. Yeah. Some people, if you're in a situation, if you don't have a significant other, maybe see if there's a family member who wouldn't mind, adding you to their policy, or there's a number of different options. But whatever you can do to keep coverage continuous, you want to try to keep that going.
Okay, that's great to know. Let me ask you this about people with kids.
Sure.
In that same kind of instance where they may not necessarily be driving or they don't have their own car yet, but does it make sense to add them to your policy if they're planning for driving at some point, just so that it starts to show a track record of having insurance? Does that matter at all?
The younger drivers is different because obviously the younger drivers are paid the most statistically for insurance. So that's going to prevail over any other type of longevity for most younger people. Typically, you only want to add a young driver if you have to. And that's where, so like, for example, if your child gets their driver's license, they're a legally licensed driver, by law, you need to add them to your insurance. Even if you won't let them drive your car, because they're a resident relative in your household, you have to add them to the policy. So if you don't want that expense, then yeah, you want to maybe try to encourage your children to not get their license until they're going to be handling their own insurance matters. But yeah, you don't want to add them if they're not going to be driving your car. You want to try to put yourself in a position where you're not adding that young driver, because some companies, their rates go up substantially if you add a younger driver. Where I'm at right now, we actually have some pretty good rates for young drivers. So if you have, someone underage and you want to see about an affordable plan, well, that's one of the things that we've been getting consistently from people we've talked to, is that we were able to help them out greatly when they had drivers, especially under the age of 20. So that's a small plug I'll put in for myself. But
I'm with it.
Yeah, no, that's something you want to try to avoid if you don't have to.
Okay, fantastic. Good to know. Before we talk a little bit about keeping your home insurance rates low, or some tips for that, anything you want to leave us with on the auto side?
The other thing with auto, you would always, even if you're going to stay with your company because you don't want to jump around, you always want to contact your representative and just have a review your policy. That's what we're here for. We can sit back and make suggestions. Sometimes I'll see people with higher liability limits. I know we talked about that in the past. Maybe you can take a look at it and say, okay, well, maybe we'll go down on liability. Sometimes I've advised people where they prefer to carry higher liability. Well, I'll say, well, maybe you could, you want to save some money. Let's reduce it over the summer. Summer, we tend to see less accidents because there's less weather conditions that are going to be prevalent. There's not, slick roads as much, or what precipitation and things like that. So sometimes we'll say, okay, well, over the summer, let's lower your liability. You can raise that again in the fall once the weather turns. Or again, just you want to review if you need to carry as much coverage on your car. I've had people, they have a 2002 car that they're paying more full coverage than what the car is worth. Those are always things you take a look at. The other thing is usage. People don't realize that one of the things that rating factors that goes into insurance is how you're using your vehicle. So if you're not driving to work because you're working from home, that's something that can be adjusted, that can save you money. And also, if you're not driving your car as much, that's something that can be adjusted as well. So typically, previous to the pandemic, people were putting, average 12 to 20,000 miles a year on the vehicle. But a lot of people's driving habits have been significantly reduced in that time. So now if you're driving, 2 to 3,000 miles a year because you're barely going anywhere, you can adjust your insurance and you can get a pretty good reduction in your rate as well by doing that.
That's really good to know. Just in general with auto insurance, do the companies ever just go in? I know this happened during the pandemic where they adjusted rates down because people weren't driving, but do companies ever just go in and be like, you know what, it looks like some factors have changed for this person and the rate should be lower? Is that a thing, or do we have to reach out about that?
No, they will do that. Most companies will reevaluate policies typically, and especially, they're always constantly working things in the background. If they're looking at, okay, another thing that keeps your insurance down as well is you pay your bills on time. That's another thing most companies will look at. If you're the type of consumer that's paying your bill on time each month, you never go into any type of cancellation or lapse, that helps keep your rates lower. So that's an insurance company gets incentivized to keep you as a customer, especially if you're not putting in claims as well. So those are things that they'll sit there and they'll look at and they'll say, well, Danielle pays her insurance every month. She's never late. She doesn't put any claims in. We want to keep her around as a customer. This is the type of person we want to have insured. Those are typically people who are going to get the best rates.
Okay. All right. Good to know. All right. Let's talk real quick about home insurance and any tips you have for us on how we can keep our rates low on that.
Yeah, on a home insurance, home insurance is a little different than car insurance, whereas they don't look at switching around as much as the rating factor. So that is something you probably can shop more often than not, where it won't be a bigger factor for you.
Seems like folks get kind of comfortable with their homeowners insurance and don't really change that too often anyway.
Oh, they really don't. A lot of times people think, because most people have their home insurance set up through their escrow account with their mortgage. So because of that, they feel that some people, I've literally had them tell me that they can't switch it without affecting their mortgage, and that's not the case. What happens is insurance companies, you're just send the bill to your mortgage company, and the mortgage company just pays it. It doesn't matter who the insurance company is. A lot of times people, when they're buying their house, either their realtor or their mortgage rep, introduce them to somebody who handled the insurance for them, and they're thinking that everything's tied together, and it's not. At that point, you can switch your policy at any moment. You just need to have your new company send the bill to your mortgage company, and they'll pay the bill. So that's one thing. Switching your home is not as hard as people think it is. The other is, as far as when you're looking at your home, there's certain things you can do as far as look at how much you're covering your house for. A lot of times, I think we talked about this before as well, but we've had people where, especially in, North Nashville, East Nashville, where the replacement value of your house, which is the cost it would take to rebuild your house as it is now, is a lot less than what the market value is. Because that's typically what they're doing in those areas. They're tearing those houses down and rebuilding them because the land is worth a lot more than the house. So a lot of times, some people are they have their house insured for what the market value of the area is, and not necessarily what the replacement is. So you want to make sure that your house is insured for replacement, not market value. That can be insurance costing a cost of hundreds of dollars a year, just because if you have your house overinsured. Because at most, insurance companies are only going to pay the price to replace your house as is.
Okay, that's very good to know. Are there other factors that contribute to your homeowner's insurance rate outside of just like the value and replacement value of the home?
The deductible is another one I would definitely want to take a look at. I've been advising people lately, you may want to go higher deductibles. Sometimes people think that, if something happens to my house, I don't have to come up with this large amount of money in order to get my repairs done. But it sometimes doesn't benefit you to have a $500 to $1,000 deductible on the home insurance, whereas most people typically don't put claims in that often on home insurance. And then also with, let's say for example, if you have a loss that's going to be within the $2,000-3,000 range, you're better off paying for that yourself than putting a claim in which you're looking at potentially raising your insurance rates or even potentially getting canceled. Because with home insurance, if you put in like 3 claims within the 3-year period, your insurance can get canceled and it'll be hard for you to get other insurance. So a lot of times I'm advising people, especially with high value homes, you want to take a look at, you're going for $2,500 to even a $5,000 deductible. That can save you hundreds to thousands of dollars a year on the depending on the company and insurance costs. And in the event something happens to your home, you're looking pretty much for your home insurance for major catastrophes. And let's say like there's a fire or tornado damage, things like that. So if you have a $500,000 house and you sustain $100,000 worth of damage with a $5,000 deductible, they're going to cut you. They're going to give you $95,000 to make the repair. And a lot of times you can make arrangements with either the contractor to, okay, this is what I have, even though it's $100,000 job, would you do it for the $95,000? And they'll do it in order to get to work. They'll cut you a deal or things like that. So there's a lot of different ways you can do with your home that can save you money. Because again, if you're paying for the right to pay such a lower deductible, and the odds are you're not going to put a claim in.
Right.
You're just paying money to hopefully not pay as much in the event you have a loss. And if you never have that loss, you just paid more for nothing.
Oh my God. That is really, really helpful. Really, really great information today, Jeff. I want to make sure people know how to get in touch with you and get their policies reviewed because again, we don't want to be overinsured or underinsured. We definitely want to make sure that we're having the best rates available for us. So, what's the best way for folks to reach out to you if they just want to meet with you and get their policy reviewed by your team?
Well, the number's right there on the screen. They can call 629-237-9453. I've talked to and done business with a lot of people from Black People Making Moves and Black Business. So I've been really grateful for that. The other thing too, you can also go to jefflowers.net. That's my website. It'll pull up all my contact information. You can do some quotes right there, and then that information gets sent over to me. Or again, my contact information there. You can shoot me an email, give me a call, and we can get the process started.
Wonderful, wonderful. And someone said that was a great point on the mortgage insurance deductible. Yeah. Fancy it was. I'm like, yeah, you're just paying all this money and you're trying to avoid having a large deductible when a lot of us never put in a claim.
Exactly.
So that was an amazing point. Thank you so much, Jeff. And we look forward to having you back again next month.
All right, sounds good. Looking forward to it.
All right.